Now it's my pleasure to introduce our panelists for today's broadcast, Gianluca Quiroli. Gianluca is a director on the advisory services team at Radius, specializing in transfer pricing, compliance, tax withholding, accounting, and entity structuring. With over 15 years of experience in both the public and private sectors, Gianluca brings a wealth of knowledge and practical expertise to Radius. Prior to joining Radius, Gianluca performed a number of in-house tax functions in high-tech, biotech, manufacturing, and professional services industries, and at Ernst & Young. Gianluca has a Master of Science in Accountancy from Bentley College and a Master of Law in Taxation from the University of Florida College of Law. Gianluca also holds a bachelor's degree in accounting, and he is a licensed attorney in Italy. Over to you, Gianluca.
Thank you, Ed. Welcome, everybody. Thank you for joining us today in this webinar presentation on transfer pricing. Let's take a moment to dive into our agenda today, where we are going to see the items covered under the subject matter of transfer pricing. We're going to briefly talk about the basics and the mechanics of how transfer pricing works, as well as how the price determination works as well. What's going to be key and part of the presentation throughout the slides we'll cover is how to answer a question for your organizations, as well as for those that are going to be engaged in preparing transfer pricing documentations and so forth. And then we'll talk about several considerations in terms of policies, double taxations, and so forth, and what the corporate tax risks are for multinational companies, regardless of their size. And depending on time, we'll cover some Q&A at the end of this presentation as well. So without any further delay, we can flip on our first slide. And that introduces the topic of transfer pricing, why this topic is so important and so relevant, these days. Together, probably with withholding tax is one of those topics that has been categorized as a Tier 1 topic by the U.S. IRS, specifically for all the transactions that in the past, I would say 7, 8, 10 years, companies have put together, throughout the globe, considering how many U.S.-based companies have expanded abroad and beyond the U.S. territories, and all the transactions occurring between and among those entities within the same group. So it is important, transfer pricing, because it does affect the profits of a business subject of a business entity in how the tax is calculated in a particular country. We talked about how aggressive the foreign tax jurisdictions, as well as the U.S. IRS, have become in the last few years. And most of us here today probably have heard, at least in the news or the headlines, some of the major companies such as Amazon, Google, Starbucks, and another big example is Apple, that is not listed here, but for their Irish subsidiary and tax planning schemes that have been taking the headlines in the last few years, with very relevant, substantial discussions in various bodies, governing bodies of the world, especially here in the U.S. So it's important because there are considerations that have to be given not just on one side of the transaction, but there's obviously considerations that need to be taken into account on 2 or multiple countries, because as transactions are put together, they might be relevant for 2 or more countries, and therefore there are several tax authorities and several governing bodies that can be interested in actually taxing a particular profit that derives from the transaction, or denying a particular deduction or expense that is on the other side of the transaction. And we'll get into this in a little bit when we explain how actually this works.